Good morning and good afternoon, everyone, and welcome to another series of EquityMultiple. Today, we're speaking and discussing demystifying the through alternative investments. So I'm very thrilled and excited to moderate this session. My name is Margaret King, and I lead Fintech partnerships and corporate ventures for Franklin Templeton. And in today's series, we're talking about what is the alternative asset management industry. It has continuously grown recently over many years and become more mainstream in the modern investment landscape. AUMs are at record highs. Investors' appetite in alternatives has also increased steadily over time. The demand for this particular industry is no longer a choice to a few reserved selected groups of sophisticated investors, but have grown significantly proportion to many of the institutional investor portfolios investors as well. According to a recent study on Preqin, 3,500 deals in 2008 to more than 11,000 a decade later were in the alternative investment class. So that's 84% growth of investor plans that have increased in capital commitment for alternative asset class. Another key driver of this expansion is through the emerging markets as well. We've seen the demand for alternatives grown in APAC, Middle East, and Latin America, and particularly in Southeast Asia countries, China, India, and Brazil. These are clearly increasing importance for both capital and investors' appetite for alternative investments. So the CAGR is expected to grow from $10 trillion in alts to close to $17 trillion by 2025. So a very, very important asset class. And today, along with me, three founders that I'm excited to introduce will be in part of this panel discussion to tell us a little bit more what they are doing in this modernization of technology that offer these kind of alternative investments for investors. So today I would love to introduce Charles Clinton, co-founder and CEO of EquityMultiple, leading an online investment platform that leverage technology to help modernize real estate industry. Charles, if you can say hi. There you go.
Hi everyone. Should I jump into the introduction and background here, or we want to get everyone introduced first?
Let me get everyone introduced, and then we'll do a introduction really quickly. And then Carter Malloy, founder and CEO of AcreTrader, a land transaction investment technology company for farmland investment. Quite interesting. There's a lot of interest in that asset class. Last but not least, Swati Chaturvedi, co-founder and CEO of PropelX, which is democratizing access to private markets by creating an investment online platform that gives investors the power to discover and fund visionary science and deep technology startups. So Swati, welcome to the platform as well. So with that, first, maybe I'll pass it back to Charles to do a quick intro of yourself and what exactly are you doing in terms of developing this online investment platform for real estate industry.
Yeah, absolutely. Happy to. Well, first, thank you for moderating. Thanks everyone for joining today and spending a few minutes with us. Hopefully it's interesting, educational for everybody. So EquityMultiple is an online real estate investment platform that offers investors access to a range of pre-vetted commercial real estate investment products. I say products because we have a range of options within real estate. You can invest into individual properties, or you can invest into diversified investment vehicles. And within those kind of vehicles, we have a few different options. We have a short-term savings product. We have thematic portfolios of properties, and then we have more traditional real estate funds. And in terms of the property types, it really spans the whole gambit. A lot of our focus is in multifamily, industrial, and hospitality at the moment. But we offer really everything within commercial real estate, depending on the particular market cycles within either a given geography or within a particular, sub-asset class of properties. The goal here is investors get the benefits of diversification into real estate, with real estate professionals doing all of the heavy lifting for you. In terms of a little bit about us as a company, We were founded in 2015. To date, investors have invested over $400 million with us into over $3 billion of real estate. We've distributed over $200 million to investors in dividends and principal repayments. We've had 70 investments go full cycle, as we say. They've been exited, investors have been repaid. And on average, those investments have produced a net return to investors of over 15%. And that's really what all of this is about. We're trying to help investors build wealth through real estate and other alternatives, like you'll hear from the other folks on the panel today.
Oh, that's fantastic to hear. Charles, thank you for giving us that brief overview of your company. Now we turn over to Carter. Carter, maybe you could tell us a little bit more about your investment technology company and what you're doing to disrupt farmland investments.
Yeah. Hey, Margaret, thank you for the introduction. So similar to Charles who just spoke, we are an investment company. However, we are focused on the land and farmland spaces. So both farmland and timberland on our platform. Company's been around since about 2018. We're about 150 people today here inside of AcreTrader. Done hundreds of millions of dollars in investments across geographies and crop types, both here in the United States and in Australia. And similar to owning apartments or real estate in general, with land, you own the underlying land, and then you get some rent from the farmer that either comes as a portion of revenue from the crop or from that farmer paying a lease. So you're exposed to both the potential rental income or revenue coming off of the crops, as well as any appreciation that may take place in the underlying land. Over long periods of time, that has produced, call it like low double-digit rates of return, so 11 to 12%, but with much less volatility than just about any other similarly performing asset classes out there. So it tends to be very slow and steady over long periods of time, and it's something we're excited about.
Thanks, Carter, for that great intro of your company and your investment platform. And then last but not least, Swati, tell us a little bit more about what you have created with private markets through PropelX.
Thank you, Margaret. Hi, everyone. It's such a pleasure to be here. I'm absolutely delighted to share the stage with such accomplished people. I am the CEO of PropelX. PropelX is an online investment platform. Our goal is to democratize access to private asset classes, and we focus on three types of private assets, which we make available to accredited investors worldwide. We enable accredited investors to invest through our platform directly into startups, into venture funds, as well as now coming up into hedge funds. So that's what we do. We are a regulated platform, so our subsidiary is a broker-dealer. So just like Charles said, in their case, the professionals do the heavy lifting. Similarly, in our case, we conduct a lot of background diligence on all of the opportunities that are featured and closed on the PropelX platform. So that way, investors have the comfort of knowing that there's someone who's actually done the thorough due diligence, curated the opportunities, and found things that are meaningful to invest in. So that's what we do at PropelX, and delighted to participate in this conversation today.
Wow, that's an amazing panel speaker. I'm so excited to moderate these sessions. There's a lot of things going on today these days with the market. One, the volatility, the macro environment, and then also, we're still recovering from a pandemic with a lot of things that we notice are not exactly back to normal. I think one thing I would like to pose this question on with the entrepreneurs on this panel is with what you're seeing with the macro environment right now, what are some of the correlated and non-correlated asset classes that can help your investors? And I'll start that with Charles first, if you could take that questions.
Yeah, absolutely. So, we're obviously a real estate focused platform. I think part of our core value proposition is the low correlation between private real estate investments and the public markets. There are plenty of real estate investment options that are public in the form of public REITs, but public REITs tend to trade up and down with the market rather than being reliant on their net asset value, as it's called. Their kind of true market value of the underlying properties they own. by taking it off of the public market, doing it in the private market context, the way private equity firms do. You remove that daily volatility and correlation to the market. Really, I think that's the value proposition in a very simple way of not only us, but I imagine everyone on this platform, that you can get access to something that used to be very difficult to access, that institutions have long, made a huge part of their portfolio. And you can use it as a way to diversify. I mean, we would never argue against investing all of your money with us, or argue for investing all your money with us. We think that real estate and other alts are just part of building a smart portfolio that, over time is both showed to produce higher returns, but also be more resilient in changing market conditions, hold up to stress testing better. I think that's really the value proposition to the investor. In terms of the macro side, I feel like we'll get into that a lot more. So I'll hold off on that and turn it over to other folks.
Thanks, Charles. I think that was great response to the questions. I think part of that is that we see that farmland investment is also very non-correlated to the public market. And maybe Carter, if you can weigh in on the same questions, what are your thoughts on farmland investments?
Well, I love farmland investments. I work with them every day. So regarding correlation in particular, it's something like 0.02 correlated to the S&P. It's like almost perfectly non-correlated, in fact. And when we go through and run that analysis over long periods of time relative to any major asset class, we can't find correlation. So it truly acts sort of independent of most major markets. The one exception is when we look at the correlation of farmland to a core economic indicator, that being inflation. So CPI or PPI, the ways that's commonly measured. And in our cases, there is the most significant correlation of anything with farmland is to inflation. The reason seems to be pretty simple. We produce food, fuel, and fiber. Those are often very inflation-linked products. And so as a result, the example would be currently, we've seen a meaningful increase in the price of corn and soybeans, which are grown on about 60% of U.S. farmland. So that in turn can often turn into more revenue, can turn into more profit, and can turn into more return for the landowner as well. So aside from inflation, where we do see some correlation and thus have seen some real increase in interest in farmland in recent history, we don't see correlation to any other major asset classes out there. So it tends to truly kind of act on its own and be an odd duck in that regard.
Thanks, Carter. That's great perspective on farmland investment as a non-correlated asset class. I think that there's no doubt that there's also, along with the global macro environment currently, there's also a lot of turbulence in the geopolitical environment through whether it's climate or different asset class. The one thing that technology does touch us is it touches across the organization, so it's borderless. I think from that perspective, Swati, this question is tailored to you. What do you think is the impact given your investment platform, and how is it impacted by turbulent geopolitical climate, or is this truly a different asset class that's borderless and goes across also regions?
Well, I think when we talk about borderless, we do have customers all over the world. We have accredited investors who are investing from all over the world, anywhere in the world, because it's an online platform, so it's globally accessible. So absolutely, in that sense, it is borderless, I would say. But where borders arise is all the users who are using the platform need to meet the accredited investor standards of the United States, right? Which is they need to have a certain income and net worth level. So long as they meet that, they can be anywhere in the world. They can be transferring money from anywhere in the world. There's certain anti-money laundering rules that apply, and we of course take them very seriously. We have processes in place for that. So to that extent, yes, anyone can access it from anywhere in the world, and so long as they meet the criteria, they can make investments. But to your other you alluded to the geopolitical turmoil. In that sense, I would say we are startups are not so impacted by very many macro level events, I would say, unless there are, complex supply chains that may get impacted. So I think it would depend a lot on the sector. But certainly if you're just doing software, for example, unless your team is sitting in Russia or Ukraine or are somewhat impacted by that, you can otherwise get by. So I would say it really depends on the sector quite a bit. The kinds of companies that we work with at the moment are based in the US. So we tend to work a lot with companies that are using breakthrough technologies. So whether it's in life sciences, very many based in the US, green technologies, mostly based in the US, but some of them are impacted by the supply chain issues. Financial technologies, Fintech companies, they're global in nature. And so some are impacted, some are not so much impacted, just like any other business. But I would say they are less impacted than many of the bigger businesses that are super integrated worldwide. So that's what I would say. It's globally accessible, but yes, depending on the business, they may or may not be impacted by the geopolitical turmoil right now.
Thanks, Swati, for that thoughtful answer. One other question, and I would like all three of our entrepreneurs to answer this one because I think it's very important. And then maybe I'll go with Swati first, since you were just on. Technology, for me, I'm pretty passionate about what it can do. And one of the things technology can do is actually, democratize alternative investment, particularly in this asset class. Tell us a little bit more, your thoughts around creating PropelX, Swati, and what your vision was in creating PropelX to democratize alternative investment in deep tech, because particularly that's a long journey, right? That's a long journey for any development and this investment platform that you created. Swati, we'll start with you first.
Yeah, absolutely. So let me start with the vision. So when I started PropelX, before that, I was working in private equity. So I was an investor myself, and I wanted to participate in startups. So San Francisco has this vibe. I started the MIT Angels Group so that I could be an angel investor. And that's when I discovered all of these hurdles that exist for angel investors wanting to invest in startups. Number one is the check size, which I think the others will also agree with me, is that the average check to invest in a startup as an angel investor is like $25,000 at minimum. So if you really want to build a diversified portfolio, let's say of 20 startups, you are investing $500,000, and that should be a small portion of your net worth. And that becomes beyond the reach of many people. So we really needed to bring down the check size. That was one of the challenges that I encountered wanting to be an angel investor. Another one was, of course, just this idea of access, which, of course, having an online platform makes it globally accessible. But most people, these deals happen in closed rooms and in country clubs and so on. And most people ordinary people don't have access to these. So the idea of using technology to make these much more widely accessible was important. A third challenge, of course, is this idea of lack of information. And now that there's I would say, proliferation of even platforms, despite there being so many platforms, there's even less information. So I think users or investors have to be careful about that and join the platforms where they think there's most information. And so being a broker dealer, or our subsidiary, as I mentioned, is a broker dealer, that forces us basically to share to do a lot of due diligence, and we on our part share a lot of information with our users, because we observed this and identified this as a key challenge in helping this market thrive. And finally, there's this idea of a secondary market. So, there are four big challenges. One is, of course, it's not globally accessible. Check sizes are too large. There's not much research. And finally, there's no secondary market. And that's something that we're working on creating as well. So our vision was this global platform, which is globally accessible and solves these four challenges, which is, how are we solving these four challenges? Not because we're web-based, we are leveraging technology to make this globally accessible. We are utilizing technology to lower transaction costs such that even with a minimum check of $5,000, which is the minimum that we accept, we are able to aggregate small amounts and make a single investment. So again, we're leveraging technology there to minimize the transaction costs. The third is this whole idea of due diligence. So there's a lot of collaborative technology that we've developed in-house so that we're able to turn around due diligence very quickly, share it with our users, and so on. And finally, there's this idea of the secondary market. So that is something that we are working on, that's in development, and it will come about shortly. But the idea really is that once you enter private markets, you are stuck there because these are illiquid assets. So it's hard to sell them. You are there along with the company for a ride for like maybe 5 years, 7 years, sometimes 10 years, sometimes more. So if investors wanted to exit ahead of the actual liquidity event, how could they do that? So that's something that we are working on. That's a feature or a thing that's in the works. It will come about soon. But that is the vision. Our vision is to solve these big challenges that are preventing people from accessing and participating in private markets. So let me stop there. And I know we talked about deep tech. Deep tech is a theme that we pursued. So originally we started PropelX with a mission to enable people to invest in deep technology startups, which are companies which are leveraging breakthroughs in science and engineering to have an impact, to change the trajectory of humankind, so to speak, whether it's, cancer therapies or developing abundant energy for all, or taking us to space, or helping us produce more food for everyone. All of these are based on breakthrough technology. So all of the companies, or most of the companies now on PropelX, they do meet these criteria, that most of them are deep tech startups. That is our passion. It's our mission to get these commercialized sooner with the help of people around the world who are investing in these amazing companies.
Thanks, Swati. That's a very thorough answer. And I think, there's a lot of parallels in deep tech and into farmland and real estate investment too, sharing some of the same pain points on access and research and materials. With that, Charles, would you please weigh in and give the audience some thoughts of how technology open access for real estate investment? That's another asset class that's in particularly. There's so many opportunities, so many choices. How does investors leverage your platform for real estate?
Yeah, I mean, everything that Swati mentioned really holds true in our business also. I think the core challenge that we were trying to solve at the outset is really around accessibility. And accessibility is both in terms of pure, how can I get into these types of investments, but also in terms of making the minimum investment something that makes sense for a broader range of investors and gives them the opportunity to diversify not just into real estate, but within real estate. So that means bringing down investment minimums to $5,000 or $10,000 for individual properties, but also bringing down investment minimums for pooled investments. So if investors want to invest one time and get into 5 investments or 10 investments, giving those kind of options so that they can achieve the diversification they're looking for within the allocation that they're willing to put into alternatives, into real estate. So, from a very simple level, I just think that's the core value proposition of all these alternative platforms. Private equity has dominated all these markets for a long time. I mean, particularly in real estate and venture, of course. And part of that is just a matter of how capital intensive those businesses are. If you look at commercial real estate funds, you can name 10 off the top of your head. Well, maybe I can, not everyone who's not in real estate, but that are, have $10 billion plus in assets under management. I mean, it's an incredibly capital intensive business, which keeps, sort of individual investors largely out of it. And the opportunities to go into it are those sort of country club opportunities or someone owning a rental property on their own, which becomes a lot of money to put into a single investment, a lot of risk to put into a single investment, and then a lot of work to put into something that, isn't your primary source of income. So, our goal is to make real estate investing as simple as investing in the stock market. The same revolution you saw in the 1990s as, stock trading started to become a direct-to-consumer business and less mediated by brokers. That's really what we're trying to do here. I think the additional challenge, to Swati's point, that we have to cross is the information divide. So, we recognize that there's incredible opacity in real estate versus public market investing. There's also less investor education surrounding it because it is a new asset class for a lot of individuals. So our job is to, help bridge that. So we do a ton of investor education, of course, but, as Swati mentioned on the due diligence side, we are a registered investment advisor. So we have fiduciary duties to perform due diligence, to help manage investments on behalf of investors. And we have a separate team that's, one team goes out and finds investments, one helps negotiate them, another helps look after them for the life of the investment after they're done. Really, we want this to be something that is, accessible, not just by virtue of being on a website, but because that a lot of the hard work involved in this has already been done for you. And if you have questions, we have resources, we have people on the phones. We want to be there in many cases in your first step into investing in real estate and alternatives.
Great, Charles. Thank you for answer. And Carter, along the same line, farmland investment, of course, is another asset class that is also very capital intensive, and access to and limitations of traditionally what you can provide in terms of research into farmland investor, particularly closed, right? What are your thoughts with what you created and the ability to give people more access into farmland investments?
Yeah, so I think our questions would probably be fundamentally similar to both Swati and Charles, in that we're looking to provide access, liquidity, and transparency within a relatively obscure asset class. There's trillions of dollars of this stuff, but still it's not highly common. Tactically, I think we're a little different, just given the differing nature of the asset itself. So what I mean by that, one is, I think, Charles, you're speaking to education. It's hugely important to have lots of information out there and lots of information transparency on a deal by deal basis. So we've invested very heavily in technology to help drive this. So as an example, we have on our geospatial analytics team, there's about 35 engineers today who are data scientists and software engineers building tools to assess farmland, to assess the value of land and the fundamentals of a piece of land. We then have a large operations team here, similar. I think, Charles, you guys have a lot of folks on the phones, right? That's the idea. You've got to be outsourcing and finding great offerings for the platform that fit the mold, while also making sure to answer investor questions. Ultimately, our favorite investor is an educated one. We want folks to know our business well, to know us well, to know the asset well, to know the investments well, and we love getting questions and hard questions at that. And so our investor relations, investor education team is very busy doing that every day. But then again, beyond that, for technology, thematically, I think, again, we're all the same in that we're looking to provide access, looking to make something accessible that otherwise was not, to then provide transparency. In our case, that's a secondary market. We have built all the technology and it's ready to go, waiting on a few final regulatory approvals on that, but hope to have that out very, very soon. So you've got access, liquidity, and then transparency. Again, just providing lots of information, lots of analytics, so that folks know exactly what it is that they're investing in. I think it's incredibly important.
Great, Carter. Thank you for that thorough answer. Just to remind you and encourage all the audience that you have the ability to ask the questions. Feel free to. There's a chat functions. Please put in your questions if you have any questions for any of our panelists today. So Carter, you talked a little bit about data science. That's also another important element of what technology platform enables this way. The analytics, the research, the transparency. One question for the panel today, with the current capability that technology offered more open access for alternative investments, investors are also curious about how do you kind of future-proof your investment portfolios, right? Looking maybe a little bit longer projections, because also these asset classes also have a longer tenure in their portfolio. So how do you think about tech as it enables you to help your investor future-proof their investment portfolio? Carter, maybe we'll start with you again, since you dive into more of the data science element and analytics and education component.
From a long-term portfolio perspective, I don't have to talk too much about technology. We've all got to eat, and so that's really what we do is we grow food, and so very simplistically, there's supply of farmland, which is shrinking in the U.S. every day, like 2 or 3 acres per minute going away, and we have more and more mouths to feed. So we do love thinking in the long term, and regarding our asset class, it's a particular thing we get excited about is that it seems like the demand is incredibly structural and will be here as long as humans are. How do we use technology then to help with that long-term thinking and portfolio diversification, right? So an example would be climate risk. So making sure that we are looking in appropriate areas that can deal with climate change and in fact can benefit from that. Then assessing things like water as well, right? So a great example would be in California, water, I'm sure you may have heard, water is a problem. And that can also be a real opportunity in that. So let's talk about almonds. It's just a very, very brief example where almond trees take, several years, 4 or 5 years before they're even really producing revenue at any real rate. And they last about 25 years. A lot of California is running out of water. So if you have almond trees sitting on great water, then you can actually stand to really benefit as almond trees sitting on not great water come out of supply. So less almonds grown, or relative almonds grown, means more and more price. So you can actually be positioned very well if you have great data, you have great analytics, and the ability to really dive into those things. And in our case, that means GIS mapping and data science to clean up all kinds of various government data sets and go and run tests on particular farms to know that these have great sustainable water. So just an example, but there are many more like it where we're really, really excited to apply data science and technology to investing and understanding this asset.
Thanks, Carter. I think along the same line, you see, the changing climate and environmental changes impact on farmland investment. But at the same time, technology is able to help you measure soil, water much better, the use of farmland in general, the products, the produce that comes from farmland investment. This is where really tech step in. Maybe Swati, I'd like to bring you in the conversation. How do you think tech is really helping that, right? Traditional farmland marries tech.
Oh my God, yes, because I was smiling when Carter was speaking because we've hosted so many startups that are addressing some of those questions. In fact, one of our companies was acquired by Standard & Poor's, and this was one of the companies that was featured on PropelX was recently acquired by Standard & Poor's. This was a data science company to measure and address climate risk for financial services for the most part. So it is something that is part and parcel of what we do, when talking about the future, addressing these issues, whether it's climate-related issues, it's health-related issues, it's food-related issues, transportation-related issues, energy. All of these are being addressed by startups that are sprouting up today, all over the country and in fact all over the world. And that's why I'm passionate about these kinds of companies that we defined as deep technology startups, companies that are leveraging breakthroughs in science and engineering to have an impact on these different areas of our lives, right? So yes, technology plays a part in all of this, of course, and we've hosted many, many startups. So I think one of the first companies that we launched with was a company called AcreTrader. I mean, it was an early company on our platform. data science for farming, for agriculture, basically. And they were pulling together data from disparate sources, so different types of data, different streams of data, and so on, whether it's from the satellite data, so whether it's coming from NASA, or soil data coming from UC Davis and then all kinds of other crop-related data. So very different sources, but you could overlay them and see them on that same plot of land. And that is what technology brings to bear, it makes it happen. So it's just interesting that we're talking about farmland here and investing in farmland. And on the other hand, on PropelX, you can invest in things that make farmland more efficient, I guess, or things that can help you better assess farmland. So yes, there is this idea of technology marries, not just farmland, but other things as well. Technology marries healthcare, technology marries energy, and so on. So we have companies that are addressing each of these areas. And coming to your question, Margaret, you said, how do you future-proof your portfolio? I think one way to think about it is to just invest in the future, right? Invest in what we think is the vision of the future. And that's what we're trying to do at PropelX. We have this vision of the future, and these startups, these amazing companies are building their own visions of the future, and we are enabling people to invest in them and empowering them to do so by lowering the check size, by making this accessible, by giving them the information. So yeah, I'll stop there.
Perfect. I love your passion around this topic, Swati. So thank you for weighing in. Again, encourage the audience, if you have questions, feel free to put it in the chat and we'll get to your questions. Now I want to turn the table a little bit around, because now we're going to talk a little more about the current macro environment and touch a little bit on that. Recession environment, inflation's going up. We see, also the impact also on the geopolitical environment comes right along with it. And one of the asset class that is everybody thinks is very correlated to the recessionary environment is real estate, right? And you see that all over the news these days. One of the things, Charles, a question to you is, under the current recessionary environment, as some people are defining it, what opportunities do you really think there is in particularly the real estate asset class?
Yeah, this is obviously a question we're getting all the time right now, and we spend a lot of time thinking on and working on our end. So, you hate to talk about a recession in terms of its positives, given all the negative impacts on people's lives really directly across the economy. Investments made during down cycles in cyclical type of industries like real estate, have a much better chance of being a good investment, a outsized return kind of investment, versus buying at the top of a growth cycle. So, I think as we look at the market opportunity on a go-forward basis, we see asset prices coming down in real time right now. So for real estate, most real estate is purchased as a multiple of revenue, and that or a multiple of NOI rather of bottom line income, and that multiple goes up as interest rates go up. So everyone, I'm sure, is aware that the Fed has been very aggressive in raising rates over the last few meetings, and projected to raise rates maybe a little bit more slowly after the recent inflation news. But certainly there's forward rates that are planned and that will happen. All of this puts downward pressure on real estate prices in the immediate term. So we really think that that's going to create a tremendous, once in a cycle, as they say, buying opportunity, over the next few quarters as asset prices readjust to these higher interest rates. Investors can buy at depressed values. And as the economic cycle changes in a 3 to 5 year kind of time horizon, those values could really look, like tremendous opportunities. The other place where we see a lot of opportunity in the very near term is in real estate lending. So a lot of our business is, concentrated into our investors being, the buyer, the owner, the partial owner of real estate. But another side of our business is where investors get to act as the lender. They can, take the place of a bank or a, private equity fund that does lending. And with interest rates rising, that does two things that makes that sector really attractive. One is just the returns are going up. The returns are 3 percentage points higher than they were 6 months ago, which, is a very different value proposition for people who might want to invest in real estate debt. And, the other side of it is it just creates market turbulence. So banks that used to lend one way now, are unsure of what their new lending standards are. So that creates an opportunity to go into a market that's a little disrupted and offer services that are valuable on the other side, that are valuable to the real estate operators who are still trying to do business, who need to refinance their existing opportunities. So I would say we're in this mode now of thinking about opportunistic investing because, as I said, I think that the next 6-12 months are going to be, a time where people are going to get a lot of good value.
Thanks, Charles. Great answer. And, great thoughts and suggestion on also thinking of more about future investment opportunities too, despite the current economic conditions. We have a few really great questions coming in from our audience. And one of the question is that your platform in particular are more tailored toward accredited investors. Is there some visions in the near term that these platforms will enable opportunities for non-accredited investors? Swati, maybe I'll throw that to you first and then we can follow through.
Yeah, absolutely. So yes, what I would recommend is please go through our registration process and select I'm not an accredited investor, because in the future, yes, there will be opportunities for unaccredited investors as well. And the reason for that is as we do more and more and bigger deals, we are allowed to do what is called a Reg A plus deal, which is marketable to all investors, whether or not they're accredited. That's something we are working towards. So I would encourage you to go through our registration process and leave your email with us, because at the moment we are absolutely putting together a much larger mailing list of people who are interested and who maybe are not accredited, because we are coming out with much bigger opportunities shortly. And think about it this way, that there were companies that raised financing on the PropelX platform a couple of years back. They are much bigger now. Some of them are doing pre-IPO crossover rounds. We have the ability to participate in those. We have the ability to put them on the platform and actually make them available to unaccredited investors as well. So that is something that we will be coming out with. I hesitate to give a timeline right now because these things sometimes take longer than you imagine. That said, I would encourage you to go through the process and at least leave your email with us.
Carter, any thoughts?
Yeah, I would say the same thing. It is important to go ahead and sign up so we can make sure to keep in contact with you. I'm sure all of us do plan on opening up to more and more folks. The accreditation definition from the SEC has also improved just in recent years, where now you can take certain exams and become accredited without actually having the wealth marker or the income marker. So we're really excited to see that progress and are hopeful that we will see more of that. And we too, as a company, we do plan to open up to non-accredited investors in the future. Frankly, it's for us a large consideration of that is just, can we service those non-accredited investors appropriately? Whereas with an accredited investor, there's larger check sizes and the ability to make sure to service them and give them the time that they need. We want to make sure that we provide that to everyone. And of course, we all are here talking about democratizing assets. The theme was never to democratize for only one certain group of people that have money or take tests. It is to truly democratize. So I think I can probably speak on behalf of all of us that we look forward to continue doing so.
Perfect. And Charles, would you like to wrap up this question?
Yeah, I mean, I think as Carter said, it's absolutely part of the mission of the company to democratize not just among accredited investors, but really to everyone. Everyone we're allowed to under the regulatory regimes that we're all working under. We are actively working on the non-accredited side. We're targeting to have a product available to non-accredited investors in the first quarter of next year. Just to kind of dovetail back into what we see from a market opportunity perspective, given where we think the market's going to trend over the next 12 months, we really wanted to get that access stood up in time for, this new group of investors to sign up and benefit from that kind of unique market timing. Same thing as the other folks, would definitely encourage you to sign up. Register so we have your contact information. We'll be spreading more information in detail as we get a little closer to launch. We do have about somewhere between 20 and 30,000 non-accredited investors, signed up currently. And we're really, really excited to kind of broaden the accessibility of our platform.
Thanks, Charles. Thanks everyone for giving a preview of what is to come on each of your individual tech platform. We had another question come in, and this served and warrants is volatility of thinking about considering alternative investments, right? Though with alternative investment, there's also that involves risk. And one of the question that's coming in is that imposing that from a risk management and from an investor perspective, what are some of the trade-offs that you think investor has to consider and be aware of when it comes to investing in alternative asset classes? Carter, we'll start with you first.
Yeah, first is be ready to lose all the money you put in just about any investment you make, right? Like this is a really important thing to consider. Am I comfortable with losing this money? And if the answer is no, don't invest it. I think that's a great place to start. Regarding our specific asset class, we don't see lots of zeros for obvious reason. If it's hard to make the dirt go away, and we rarely run offerings with leverage or debt involved in them. So I mentioned earlier, it's a conservative asset class. It is not a get-rich-quick scheme, and we don't see huge returns. But we also don't see a lot of losses, and we certainly don't see a lot of steep losses within our asset class, just given the general stability of farmland.
Any thoughts, Charles, for the real estate?
Yeah, I mean, I think in investing in alternatives in general, the lack of liquidity and the fact that it's a more opaque market than the public markets, I think those are the core trade-offs. As Swati went into in some detail, I think those are trade-offs that all of us are aware of as platforms and are looking to address. The primary way we address the liquidity side of things, rather than through a secondary market now, is just by having investments that have different business plans, different hold periods. So, investments that are as short in duration as 6 months versus ones that go out, 5 to 7 years is typically as long as we're looking to forecast out. Sometimes funds will go out as far as 10 years. But I would encourage really diversification within an asset class as a way of managing risk. I mean, of course, there's risk, there's sector risk, but there's idiosyncratic risk in any particular single investment. And by spreading whatever your allocation is across different investments, possibly even doing some version of kind of dollar cost averaging, where you're investing over time as market conditions are changing, given that no one can predict, of course, perfectly what's going to happen in the future. That's a way of kind of building a portfolio that's going to be more resilient. And overall, the data on adding alternatives to your portfolio and the positive impact in terms of its ability to withstand volatility is very clear and strong. So, obviously it depends what investments you're in and what the rest of your portfolio looks like. But I would think of alternatives as a way of, shoring up your portfolio, at least from a portfolio construction perspective, as a way, rather than as a risk adding strategy.
Great thoughts. We're getting close to our hour. Just
Example,
want to check one more time.
For example, as Carter mentioned, you have to be you have the potential to lose all of your invested capital in any given investment. So you should only invest what you're comfortable with. These investments are long term, so the holding periods are long, they're illiquid, and they're very high risk. You may have a big exit or it may go down to zero. So they are very, I think you need to enter this with this idea that they are a very high risk investment class, and therefore you need to allocate a small amount of your portfolio to it, right? So the portfolio allocation needs to be in proportion to the amount of risk to begin with. The other thing that I would highlight is that you need to do your due diligence. So there's a lot of research and data. So the Kauffman Foundation, for example, has put out reports, and we have these updated on a regular basis, which show that people that do their due diligence have higher returns than those that don't. So, and the average amount of time that people put in is about 10 to 20 hours. So do your due diligence. Don't just invest. Don't invest, oh, there's momentum, oh, everyone's investing in this, or this looks interesting, or the founder is impressive. I think one has to think critically. And this whole idea of investor education is a long cycle. I think perhaps Charles and Carter might agree with me that investor education, I would say, is in my opinion, the biggest hurdle that helps us actually achieve our mission of democratizing this asset class, because there's a long way to go there. So investors do need to recognize that they need to do their due diligence. And if they don't have the opportunity, time to do it, invest in what Charles had mentioned, which is pooled investment vehicles. So with one investment, you're able to invest into multiple different startups in our case. So venture capital funds, you should invest in funds you might want to invest in funds rather than individual opportunities and such. So the TLDR of all of this is that these are very high risk. You should be ready to lose all your money. So only invest that amount, which if you lost, it wouldn't impact your lifestyle. That said, I also agree with what has been said before, that these are ways to actually shore up, or it could be a way to shore up your portfolio by making sure that you have some uncorrelated assets in your portfolio. Make sure you allocate small amounts to it because these are high risk, and so on. So I will just stop there, but that's incredibly important. Sorry about that.
Thank you, Swati. Right on time, the phone rings right as you finish answering.
I can't hear you, Margaret.
Oops, sorry. Can you hear me? Okay, great.
Yeah, we got you.
All right. I was right on time because if your phone rings right when you finish wrapping up, it's your key signal. Thank you for a wonderful session with the panelists today. I think it was an hour worth spending to demystify a little bit on 3 different and unique alternative asset classes in farmland, real estate, and deep tech. And through this, there's also a way that investors had an opportunity to learn about how to diversify using alternative asset class into their portfolio. We did have an audience that would like to know if they could follow up with getting a recording because they missed some of these sessions, this session particularly. So we'll follow up with a question that was posed out there. So thank you again. I always like to wrap up any of these sessions on a positive note. So maybe Carter, I'll pass it to you and a quick positive note before we wrap up.
Yeah, I'm happy we're here and happy to learn more about what else is going on the rest of you guys' platforms. It's been a great day, and we remain really excited about building a company and offering this asset class to many more folks like those of you on here.
Charles?
Here.
Yeah.
No, I feel absolutely the same way. This was great. Very interesting for me personally to learn more about other companies in the space. I think that if you're an investor, whether you were swayed by one or all, I would encourage you to check out all. That's part of your just investigation into what the options are for your alternative asset allocation. And especially at a time when the market is doing crazy things, it's a good time to take stock of your portfolio and look at the future of investing and see what else is out there.
Thanks, Charles. And Swati?
Last thoughts. I think I would say that as we've been discussing, these are important, alternatives are important investments to diversify your portfolio into uncorrelated assets, especially in times of turmoil like now. This is one way to shore up your portfolio, as we've been discussing. So with that, however, these are risky investments, and so one should go in with the idea that they are taking on risk and they should be comfortable with the risk that they are taking on. That said, I think there has been a big trend based on everything that we have observed in the past few years, several years, where there is this demand for alternative investments. And in my opinion, we don't see that demand going down. So we are excited to participate in this market moving forward, and very excited to be here with everyone who are also doing their different types of assets in this alternatives. So, yeah.
Thank you, everyone. Thank you, Swati, for participating. Thank you to our panel for a very lively discussion today. And it's been a pleasure moderating this session. Everyone, thank you and have a great day.
Thank you.
Thanks, Margaret. Thanks, everybody.